This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report weekly podcast highlights for the holiday shortened week of Tuesday, July the 6th through Friday, July the 9th. We began this week discussing the dollar index. You know, ever since prices got smashed coming out of that FOMC meeting 3 weeks ago, it's mainly been the dollar index that has been a problem for the precious metals. It suffered a short squeeze, a big move up through a couple of its key moving averages, and that 2 to 2.5 point move is the primary reason why the metals remain down to this day. So we're going to watch the dollar index very closely in the days ahead, and it was a primary topic of discussion back on Tuesday, July the 6th. All right, I thought I'd start with this because on this 5-hour chart that I can pull from investing.com, it shows you the full last 3 weeks since the FOMC. We're at 90.50 when the minutes came out 3 weeks ago tomorrow. And again, we shot higher and then kind of fell back, and now we've been banging around that same 92.40 level ever since, okay? I mean, not ever since, but, you know, since the 1st of July, a couple of days ago. We've been banging in here. Will we extend out and blow out to highs, new highs, relative to last Friday? If we do, then that 93.40 on the daily chart is going to start looking like that's where we're going. Want to see that? We'll look at the next chart. There's your daily chart. Again, what's 93.40? That's that high from back here in late March. That we caught because the RSI had peaked up that day like 71, 71.5. We thought, oh my God, that's so extreme to have it over 70. And we're right. Big 3-point sell-off. But now we've been up here in this 70 level really ever since the Fed 3 weeks ago. You would think this has got to have, it's going to roll over at some point. It's going to be very hard for it to extend to 93 starting from to 93 on the index, starting from a 68 RSI. I mean, it looks like momentum is fading. Okay, these highs are 73 and 72, and now we're 68. It looks like momentum's fading and it wants to roll over. Again, we'll see. Maybe what the Fed says tomorrow will help us out. In our daily podcast of Wednesday, July the 7th, we looked at a whole bunch of charts. But one that caught our eye, we paid special attention to, is the long-term daily chart of COMEX Gold. We're using here the current front month of August, the August 21 COMEX Gold contract. As you can see, a lot of points connect here. Now, this is not how we've always drawn the bull flag line that is key to a breakout. It's not exactly right where we've drawn it here, but many technical analysts draw it as you see here. And there may be some validity to that. As you can see in looking at this chart, a lot of points line up, especially where gold found support a couple of weeks ago. This is a very important chart and one you should look very closely at as we go through the audio from Wednesday, July the 7th. Now, here's the one I wanted to spend some time with. This is a daily gold going back. This is the August contract, the current front month, going back all the way to last year. The massive run-up in late July, I'll remind you, only took not even 3 weeks to go from 1860 up to, on this chart, 2120 in 3 weeks. Okay? And a different time, different place, different sentiment, and all that kind of stuff. Now, look, you and I know that purple flag line that starts from that peak on August 5th or 6th or whatever and connects to that peak on January the 6th, we know that's not the line, okay? We know what the actual line is, and if we ever get down there again, God forbid, then we'll know where to look for support and all that stuff. But I thought I would draw this line just to see where we are, okay? The middle line of the three you see on this page, okay? Because there's a lot of technicians, Christopher Mullen would be one, that say you've got to connect just those wicks, those highs, again, from August the 5th or 6th and January the 6th. So if we do that, and I draw a purple line, look at that consolidation in early May, because a lot of technical analysts were looking at that area 5 days in a row, can't get through. Then once we did get through, second half of May went from 1840 to 1920. Okay, and then fell back. Found support at that line on FOMC day 3 weeks ago, and then the bottom fell out the next day. Okay, fine. The next line I drew was the one immediately below it. I thought, I wonder if we took a line perfectly parallel to that primary line, that middle one, made it perfectly parallel, and then started it at that Pfizer vaccine news day, November the 9th. Well, look at that. Isn't that interesting? If anything, because look at the support that line provided over the last 3 weeks. Well, now I think we're on to something here. But it's not just precious metals and the dollar that we follow at TF Metals Report. There's all kinds of things that impact the gold price on a daily basis. And so you kind of got to be a jack of all trades, watching all sorts of indicators, trying to project where things are going on a macro basis. One of the big things we follow is the bond market. And as of late, it has been interest in the very short end of the bond market. That prompted the Fed to move a couple of weeks ago. And so one of our discussion points on Thursday, July the 8th, was short-term U.S. Treasury rates and what might be going on in the 2-year note. Here's the main, this is the one that really has my attention, because I think this is noteworthy, to say the least. Your very first chart. We don't talk about the 2-year note very often, again, because as you can see, for the longest time, especially the first half of this year, really, it was sideways between about 15 and 17 basis points. And you can see that on this chart. But then, with the Fed worried about short rates going negative, they pumped up the interest on excess reserves, got the effective Fed funds rate up from 5 basis points to 10, and the 2-year note sold off. And as you can see on that old stuff from 3 weeks ago, went from 16 basis points to 26, 28. Huge move. But now look what has happened since. Look what has particularly happened in the last 3 or 4 days. Falling from, 27 late last week to now 19. That is a huge move of almost 30% in a couple of days. Again, one of the ways you can read this is, oh man, look at all this demand for short-term stuff. What is going on? What's happening beneath the surface? Stock market's down, risk assets, commodities being sold. Everybody's raising cash. I don't know. Is there something like that happening? Or again, is there just so much cash that these central banks have created that there's more cash than there are places to put it? And so the 2-year note got to 25 basis points. People have been buying it like crazy, even at 22, and again, even today at 20, and now we're down to 19.5. What will it mean for this liquidity drain, if that's what it is, from the Fed? What will it mean for what they might have to do next to stave off negative rates if all of a sudden by a week from now we have round-tripped all the way back down to 15? We're going to watch this very closely. May not mean much to everybody, but it certainly means something to me. We're going to watch this real closely in the days ahead. And on Friday, July the 9th, it looks like we are going to finish the week well in COMEX Gold, maybe up as much as $25, which doesn't sound like much, but considering how tough the last couple weeks have been, that's important. It's also important we're going to finish above 1,800 as we prepare for what will be a very busy week next week. All eyes will be on the latest CPI, Consumer Price Index for the U.S. That comes out Tuesday morning at 8:30 Eastern. The PPI, Producer Price Index, will come out the next day, and Chairman Powell will begin a 2-day appearance on Capitol Hill. All sorts of headlines next week are going to impact the precious metals, but none more important than that latest reading on inflation here in the U.S. Again, that will be on Tuesday. You'll want to be paying attention to see not only how the metals react, but the bond market and the dollar too. They all fit together. It's going to be a very volatile week. Thanks again for listening to the TF Metals Report podcast highlights. Hope you have a great weekend, and we look forward to seeing what comes our way next week.